With less than an hour left before market closing at 3:18 p.m. today, July 14, we detected unusual options at the 600 strike call. Does this mean that Meta will rise to $600 per share? It's currently at $300. That's 100% gain to get to $600. So in this video, we're going to analyze these unusual options to answer that question. So let's get right to it. These options are actually being done at the same time as this other option here, the 390 strike calls. We know that because this was done at the exact same time at the 50-second mark. And also here, they are a spread together under the condition here. Okay, so let's take a look at it. This one is 23,000 and the other one at 390 is 12,000. Okay, so let's take a look at the option chain to get more details. So June 2025 is the date. Keep in mind, that's 707 days away. It's 2 years, right? So when we take a look at that 390 strike call, you can see here that there was an open interest of 12,000 already. And the volume today, those 12,000s are here. So we believe they are closing this 390 strike call. Okay? And what they're doing is they're closing it and then buying the 600 strike call here. You can see that the volume here of 24,208 is much greater than the 2 that was just on the open interest here. Okay, so they had bought these for $1,545, which is $1,545. Let's get that price correct. And since they did 23,000 of them, you have to multiply that amount to get the right value of how much they spent, right? So this is 1545 is 1,545. So this is a $35 million trade here. Okay, so very, very large investor that is going bullish on Meta for the long term, because that's 2 years out. When we analyze this trade, you can see here that these 600 strike calls are bullish. Meta is currently here. As the price goes up, this profit line also goes up. Okay, that's the purple line, is the current date here. The blue line is the line of the expiration date. Okay, so June 2025. If Meta doesn't go up, this investor would lose the entire amount of their investment. Okay, because it will decay in value. You can see here in the Greeks, this is a negative 3.94. So this will decay in value. They have a positive 20 delta. So this is bullish. This is them going long. Essentially 20 delta is like having 20 shares of Meta, because each share of Meta gives you 1 delta, positive delta. Okay, and by buying these options, they were able to save on the cost of having to own the shares, because to get 20 shares of Meta, they would have had to spend, currently 309 is the price of Meta, they would have to spend $6,180 to get the same amount of leverage. And so they're paying less. They're only paying $1,545. So that's why they're using options to get that leverage. Okay, so this is quite bullish, and they're paying this amount for these options. However, they are going to lose the value of it. The disadvantage of doing this kind of a strategy is that they could lose the entire initial investment of 1,500 if the price doesn't go up. Whereas if you had those 20 shares of stock, Meta at 309, if it doesn't move, it will still be 309. You will not lose the value of your initial investment. So that is the disadvantage of buying these call options. So when we take a look at this blue line, you'll see here at expiration, this is their break even all the way up to 615. So in 2025, June 20, Meta has to break 615 for this trade to be profitable, right? The reason why it's more than $600 is because you have to take into account that they initially paid this $15.45 debit. So you have to add that to this 600 share price. Okay, that 1,545 has to be taken into account here. When you also take a look at the purple line, one thing to note is that you see how the current price, if it starts to rally soon, this will immediately start to become profitable. They don't have to wait until expiration. They'll start to become profitable as the price goes up. And so this is what's interesting, is that Meta, if you zoom out further out to see what its all-time high was, 384. If Meta reaches 384, which is about right here, right here, these options would be profitable already by $2,000. So that's more than the 1,500 they paid. So that's over 100% gain already. So if Meta reaches that all-time high, they could close out their options and take profits right away before having to wait till 2025. So by putting on this trade now, at this moment, is quite unusual because earnings is coming up, right? That's in about 2 weeks, July 26th. Okay. And so why didn't they buy these options after earnings, right? Why were they bullish? Because if Meta was going to go down after earnings, they could have waited till after earnings to buy these options. They would have been a lot cheaper than the 1,500 that they paid per contract. And so this is something quite unusual here as well. So this is quite possible that this is also an earnings trade. Okay. So comment below. What do you think about Meta? Will it reach $600 per share in 2 years. What do you think? We can look back at this video 2 years later and see who was right. Leave a comment below, and 2 years later we'll take a look at this video again and look at the comments and see who got it right. All right. By the way, if you haven't watched our previous meta video, we did one when we analyzed these unusual options just 2 days ago. We'll put a link at the end of this video. You can watch that as well. And subscribe if you haven't, and hit the bell icon. You'll be notified whenever we detect unusual options activity. And if you're interested in other stocks as well, to diversify your portfolio, to increase your profitability, make sure to join our membership, where we have exclusive videos for our members only. Take care, everybody, and have a wonderful weekend.